Yeah, we're going to wing it.
You're going to wing it?
There. Yeah.
Okay, well, I don't have your questions. Hold on one second. You want your email, right?
All right, we're live. Hi, everyone. This is Robin Cavallaro with the Cavallaro Heath Group of Remax One and
Darren Rickwood, First Home Mortgage. So we are in my office here in Prince Frederick.
Yes. We're going live today, and I don't bash us over the social distancing thing. We've been safe, so just let that drop off right now. Today, we want to talk about forbearances because I've seen so many rumors, stories. Everybody's an expert on this, just like they are on COVID and Sasquatch. So basically, last week I sent Darren a bunch of questions and asked him to do research so that he could tell us the facts instead of all of the myths. So the first one is, can you truly do not pay your mortgage for 3 months and then not have it hurt you? So what's the deal with that?
So COVID-19, there was a bill that was passed, and it talked about forbearances. Anybody who has a government loan is allowed to apply for a forbearance. So basically, they'll go through, you basically just call your bank and say whether or not you want a forbearance. They don't have to prove anything. There's no documentation. There's nothing like that. Typically, the bill was set up to be 180 days, and then rolling, you could do another 180 days. Some people are only doing 3 months. And I know we're kind of looking at questions too. So if you guys have any questions,
we're trying. It's like we've got the phone going this way. So
we're winging it. We're winging it.
So feel free to laugh at us. We're good with that.
So we can do.
Oh, all right.
Oh, we're crooked. Hold on one
crooked.
second.
So give us
Turn
1
this back
second
here.
while we kind of rotate this for a second.
Back up. How are we looking? We're off in the distance, but we can wing it.
We're still crooked, so All right, hold on. It's catching up on the screen we're watching over there.
There it goes.
We're good.
Oh, there is a delay. Look at that. That's kind of cool.
It is. All right, so.
All right,
In
so
the distance now.
we'll kind of start over. We were talking about forbearance. We were talking about can you apply for it, not have it affect your credit.
All right, so basically, I don't want to pay my mortgage for 3 months.
Right. You can. And some banks are doing it automatically. I found that out yesterday. I had a client call me. His bank put him in forbearance on another loan without even asking him and labeled it. But so forbearance is basically puts you just like a student loan or anything else. You're not paying it. Per the bill, you actually don't pay your mortgage payment. It's labeled as forbearance, and it does not affect your credit. Okay, there's no dings like you being late or anything like that.
Okay.
The original law basically set it up to be a 180-day forbearance, and then you can roll into another 180-day forbearance if you need to.
Okay.
Some people are just doing 3 months. So, but again, to answer your question, it does not ding your credit.
All right, look, I'd rather spend my money on shopping. There's a great vacation I want to plan. There's a gazillion things I'd rather spend my money on than actually pay my mortgage. So all I got to do is call Wells Fargo and say, I don't want to pay you. Is it going to hurt me?
Every bank's a little bit different in how they do this. It really is coming out of forbearance where it may affect you.
Okay.
So once you get to the end of your forbearance period, if it's 3 months, whatever you agree upon, you have to catch up completely.
Oh.
And there's several ways to do that. One is you pay everything you've owed. They don't go away. They don't forgive it. They don't say, hey, we're just going to let you go. You don't have to pay your mortgage payments. You actually have to catch up and pay all 3 months that you've missed all at once. Oh. They can also negotiate it, maybe put it on the back end of the loan. Every single bank's different. So this is not specific to every person out there watching right now. You have to call your bank and talk to them. There may be loss mitigation where if you've lost your job or anything like that, then you have to send in docs and they have to document it. There's all kinds of reasons.
All right.
Or all kinds of options, I should say.
So let's say your mortgage is $2,000 a month.
Mm-hmm.
So you miss 3 months, you go on those wild shopping sprees, or like most people are having to do right now, using it to put food on the table, gas in the car, pay the electric bill, survive this insanity. And then all of a sudden on month 4, I got to write a check for $8,000.
$8,000. The month that's due then, plus the 3 months that you've missed.
So I don't see how that could help anyone at all.
It's set up to help people who have lost their job, who are temporarily laid off, anything like that. It may help you short term to get you to the point where you are back to work. Like now, I mean, people are starting to go back to work.
Thank God.
I've got clients that have actually started work last Friday. Maybe they have a month left, then they can catch up. There's a couple things to think about, which I don't really believe all banks are telling them, and I don't really believe people are taking into consideration. If you wanted to refinance right now, which has been very popular because rates are really low.
Yeah, they're awesome.
You cannot refinance until you are out of forbearance, have caught up, and have made 3 payments on time. You can't buy a house until you have caught up and made 3 consecutive payments on time. So that's a big catch.
Wow, because some of the things I've been seeing is that this has the potential to have the same impact on someone's credit score when they go to buy another house as doing a short sale.
So this is very different times. We've never gone through this before. There's never been a COVID-19 bill and put something like this in place.
Yeah.
Guidelines are changing weekly, daily, monthly for Fannie Mae, for government-backed loans, for everything that tells us whether or not and how we classify it. When you pull a credit and someone's in forbearance, the bank marks it as in forbearance. It's not marking it late, but you know that loan is in forbearance. Until it is removed, which I'm assuming does not get removed until you have caught up, and then we have to verify you've made 3 payments not in forbearance.
So I've had several lenders send me screenshots for a buyer that was considering trying to get a loan or refinance, and it shows forbearance on their credit report, even though all they did was call and ask their lender about it.
Right.
So, and we all know the credit bureaus, they don't magically go in and go delete as though that was never put on your report at all. So my big concern is that the long-term effect of that entry.
You really have to, and people don't know that.
Yeah.
They don't know that their loan was put into forbearance. I found that out yesterday talking to a client. He had no idea, and this was before COVID. This was, he lost his job. He had some issues. He called the bank to find out what his options were. They immediately put him in forbearance. He still kept making his payments all along and had to fight it, call the bank, have them remove it, and document it.
You would think.
You end up having to get a letter from them stating that you were on time and made all your... I mean, his situation was completely different, but I can't imagine others aren't going to go through that.
So, okay, my little pea brain, I would think that before you do something on my behalf financially, it's going to require my signature on it. And if it doesn't, how can you... That would be like me going to the store and going, hey, I'm Darren Rickwood. I want to buy this lovely shopping spree that I'd like to go on and still can't.
Right.
But I'm going to use your name.
What about going into a car dealer and looking at a car, test driving it, and the next day it shows up at your house? Congratulations, you got a new car.
That's even better. And by the way, I'd like an upgrade of what I have.
Right.
So, feel free.
So there's a couple other things you had asked me about.
Yeah.
Repayment plans. Something that once they come out of forbearance, let's say they're not back to work full, or their hours have cut, their pay has changed, or they had to switch jobs. The bank may actually negotiate payment plans for you.
Okay.
Which that may mean going into what's called loss mitigation, where the bank requests documentation, they request bank statements, they request verification of your employment and your status. And look, no bank wants to foreclose. No one wants to go through foreclosure. It's very expensive on both sides. So they're going to do everything they can. The biggest thing is to, whatever your status is, you want to contact your current servicer, the one you're paying payments to, and see what your options are. Yeah. That's your biggest thing.
And if you do get into deep, deep trouble where you don't know what to do, don't let it go to foreclosure.
Right.
Call me. At least I can run the numbers for you. If, God forbid, we're dealing with worst case scenario where you're going to end up losing it, at least let's do a short sale to where it has not as bad of an impact on you financially and credit score wise.
Right. I mean, there's options that the banks can put it at the back end of the loan, like they do student loans. There's options of doing a second mortgage where you take everything that's due and putting it as a second note you're paying.
Okay.
So all of them have options they'll talk to you about, again, case by case.
And one of the things that people need to pay attention to also is a couple of years ago, I was trying to sell a house for a guy in Brandywine that did a modification. And I don't know how similar the forbearances will be based on the modifications we saw years ago. He thought $50,000 had been eliminated off of his mortgage. Well, it was taken from this pot and put in this pot where it accrued interest.
Right.
So when we went to sell his house, he thought he was getting a check for $50,000, but instead he owed $100,000
On top, right? They put it at the back end as a second.
because the interest had racked up so fast over those years. He had no clue, and unless you read the fine print in the paperwork, it was nowhere to be found.
Right.
So I think the biggest thing you and I both want to make sure everybody understands is do your homework. Do not just call your bank and say, I want a forbearance, because it could be financially devastating.
What does it mean for you? Correct.
The other thing is I've seen people sharing these screenshots all over Facebook that says if you have a Fannie Mae, Freddie Mac back loan, the lenders are required to put it on the back end, or they may not, or they can only collect that difference when you go to sell the house.
So all this is changing, like I said, monthly from the time this first came out till now. Because we've never gone through it before. There's no playbook.
Yeah.
Fannie Mae, Freddie Mac, the government-backed loans, everything. Everybody's playing catch-up. And they're trying to adjust as they go based on...
Okay.
We'll get back to you again.
We'll get back to you, Gail. Sorry.
I don't think it's a requirement, specific, that they have to put it on the back. I think there's still the negotiation process. Now, again, you may go right into that loss mitigation. And it's not criminal. It doesn't mean you're going to go with a lawyer. It means they're actually going to examine your situation and figure out why you're asking for this. Why do you need to have it as a second? Why do you need to have it put on the back? Because ideally, they want everything paid at that fourth month. If you do 3 months, they want it all paid at the fourth. They want you to move about your life. They want to go back. Because, look, this is an issue for everybody. The banks, so right now, rates are being created and justified every day based on liquidity issues that the banks are having. And the banks are having liquidity issues because they're having to make up shortfall for everybody that's not paying their mortgages. It's impacting the entire market. It's impacting credit scores and what's required there, and it's impacting loan programs. So the banks want to get through this quicker than anybody.
Yeah.
Because they're burning through cash, everything else to make up. They still have to pay taxes. We're coming up June 30th. Tax bills start coming out. They're going to have to pay out of escrow. Well, there's going to be a shortfall there because people aren't making their payments. So insurance bills come due. They have to pay a full year of insurance. If escrow is short, they have to make up the difference. So it's a big issue for all the banks too. So I mean, everybody's adjusting as they go.
And then you get into the whole thing with the feds where the bank is not allowed to have enough cash on hand to cover their debts overnight. So then they're trying to borrow from everybody, and that's not working out too well. So I think in a nutshell, it all comes down to, unless you are in a position where you absolutely, positively have to do this, don't.
It's there to help you. It's not a benefit so you can put money away or go on vacation or go on a spending spree. It's there to actually help you if you cannot make your payments.
And if you can't, call your lender first to have the conversation.
Right.
Don't just assume. So.
Do we have any questions? Does anybody put any questions out there? No? Does anybody have any questions? We'll give you a little bit. I know we're kind of on a time lapse or time delay.
And it's a little comical if you're watching it from our side. So
I know. We've got a screen over here. We've got that screen. And that one's about
It's like legit.
30 seconds higher behind.
That'd be nice.
So this has been nice. This has been
Yeah.
nice finally being able to do. I know we've been doing a lot of videos, recording them and
Yeah.
then posting them. But now actually doing one live.
it's actually nice just to be around a human being. And
You guys are pretty close.
we'll pretend.
We don't have tape on the floor, so
We're like a T-Rex 6 foot. So it's like 6 little T-Rex paws.
it's your entertainment for today. So just post Robin, post tag her, anything about T-Rex.
And if you do have questions, my son will answer them for you. So.
All
Like,
right.
you know what? This is what house arrest does to someone.
kidding.
So, but anyway, Darren, I want to thank you very much
Thank
for
you.
doing
It's been
it.
great.
And we're going to
Wait
try.
a second.
Oh, wait.
Is this being recorded? I missed the beginning.
Yes.
Yes, it's on
It'll be
Facebook.
posted.
Yes. And then I'm going to try to see if I can figure out how to download it and put it on YouTube also. But if not, it will be on my Facebook page, the business one.
Along with all the other videos we recorded.
Yes.
I want more questions.
Me too. And we got Christy Clark here with Berkshire Hathaway, who's actually watching the
she's our
screen
proctor.
and doing it. So.
Could see.
Because we can't read all the way over here from over here. We can't even see the screen. So this old age thing stinks. But,
Oh my god, I just went by. That's how delayed it is.
yeah.
I didn't realize it was that.
Yeah, it's pretty far back. So.
All right, so if there's
Anyway.
nothing else.
All right. Well, thank you all very much. And
Guys,
we're-
enjoy the rest of your week and the beautiful weather this weekend.
And stay away from forbearance.
Outdoor
Yes.
dining and bars open tomorrow.
Tomorrow. Yay.
Tomorrow at 5. See you at Tiki Bar.
We'll see you out there.
Have fun.
Bye.